Okay, hello once again, and good evening, everybody. And you are welcome to SaffronSACAP voiceover talk show. It's another Wednesday evening, and it's great to be back again. Thank you all who have tuned in today. My name is Giz Ojiako, and I am the director for programs for SaffronSACAP. And with me today, I have my colleagues who I'm going to ask to unmute, and if they could introduce themselves, please. I'll start with you, Marcia.
Hi, good evening, and thanks for joining us again this week. My name is Master Eliza, and I'm the Director for Youth Engagement and Intervention and Life Coach.
Awesome. Thank you so much, Marcia. And alongside Marcia, we have Yemi. Yemi, would you like to unmute and introduce yourself, please?
Okay. Hello everyone. Good evening. It is Wednesday once again, and we are very happy to be here with you. It's going to be a very interesting evening. I mean, it's been 4 weeks now. We've been looking at our finances, and I know that if not you, I know that I have had to take some drastic actions, and I'm looking forward to us turning things around for ourselves and hopefully for our friends and families. And my name is Yemi Ebule Yuntari, and I am the Executive Director for Saffron. Thank you. Oh, our Facebook friends.
Thank you so
I
much.
will be with you on Facebook, everyone. So I'll be commenting on Facebook as well. Thank you. Thank you.
That's fine. Thank you so much for that, Yemi. And we just want to also welcome all our viewers who have come on early this evening. So thank you, Auntie Victoria Nwosu, Annette Cockburn, and Roland Shokumbi. Thanks for coming in early. And also a big welcome, as we've said, as Yemi just mentioned, to our Facebook family from all over the world, because you guys, you log in from everywhere. So thank you so much. Today, as we did say, we will be talking about family finances. Okay, so without much ado, I'm going to ask Marcia will first of all just to introduce our resident guest. He's been with us for 4 weeks now, and it's been a pleasure. So I'm going to ask Marcia to just big up, you know, Sam, who has definitely changed my life. Yeah. So go ahead.
Welcome again. This is Sam Lee, and he is a financial coach. He's a mentor. He's a life coach. He's a mental health advisor. You name it, Sam's done it. And this is the 4th week with us, and it has been such an enlightening journey we've been on. We really appreciate the time he's spent with us and all the nuggets that he's given us and all the guidance that he's given us. And I know that lots of people have left every session with new ideas and things that they didn't know that they could have done to make their lives better financially. So I'll hand you over to Sam, and thank you, Sam. Final week with us. We really appreciate what you've done for us, and we're looking forward to tonight.
Thank you so much, Marcia. It's been a pleasure being with you all. It's been good fun. And yeah, so we've got, we're talking about wills and trust today. Am I able to share my screen? Because you know I like my presentations. So if you just let me know when it's ready. So we've had, and I'm probably going to go through the table. There we go. Thank you. So today we're looking at wills and trust. And like I always do, you know, I've got my survey. We've not had a lot of people completing this yet. So if you would, please complete the survey. But we're looking at wills and trust today. Brief introduction. My name is Sam Lee. I've been in the financial industry. I've been in the financial sector really since 2010. And again, for me, I think something that changed my life is being involved and knowledge, learning. I believe a lot of us we struggle because we don't understand the money game. We don't understand, you know, if you're going to win a game, you've got to understand how to play it. And we don't understand money, which is why we're not winning that game. So really part of my job now, part of my business is just educating people. I love empowering people. So we're talking about wills and trust today. As a Christian, I do not hide it. I do a lot of the scriptures, a lot of the things I look at is biblical. You know, in here in 1 Timothy 5:8, it says, you know, if you do not provide for your own, especially for those in your house, you've denied the faith, you're worse than an infidel. And I think for me, when you don't have a will, when you don't have certain financial products in your life, you are denying your family. So what is the government's plan for you? If you do not have a plan for yourself, guess what the government's plan is? First one is we're working for longer. So, you know, when I first came to this country, retirement was 63. Then it went up to 65, 67, 68. They're now saying it's going to go up to 70. It's actually been mentioned and it's probably going to be 72. So that's one of the plans they've got for you. The state pension. If you came to this country over the age of 20, you'll be lucky if you're getting £100 a week from your pensions. Raising taxes, VAT on different things, the country's tax debt increasing. And the last one there says, you pay your tax when you're alive. When you die, guess what? You also pay tax. You know, they tax your estate when you pass away. So how do you feel about that? You know, a lot of people I know for sure are not happy looking at that situation. So as a company, we believe education is the key. If you educate yourself and you improve your knowledge, you will be able to not be in those people that fall for what they tell us. So our mission is to teach people how money works so they can help themselves. You know, they can know how to work their money, how to make more money, how to become debt-free and financially independent. So I mentioned earlier, my passion is empowering families for the future. So I mentioned this before, this should be your personal plan, not the government's plan, but your personal plan. So the house, your financial house, the foundation is protection. And then you need to look at your debts. You need to look at your expenses, your assets, and your income. And guess what? It could be devastating if you get this in the wrong order. You know, interesting, I received a text message yesterday, and one of my colleagues, could you mute somebody? I think somebody needs to be muted. Thank you. One of my colleagues went to see a client last year and they told them, you know, you need protection, that you need to pay your debts off. This client decided that they were going to pay their debts off first before they took the protection out. Well, shockingly, they actually passed away 3 months later due to COVID. And what then happened was the family had to set up a GoFundMe account to be able to bury that person. It's really important that when you have the knowledge, you put the knowledge into practice. Your foundation should be your protection. So part of protection today, we're going to be talking about your will and trust. Why do you need your will and trust? As you can see from here, 70% of the population do not have a will. 70%. 30% who do have a will, does it really do what they want it to do? The will is one of those things that a lot of people do not look at very much, and they don't really renew it, they don't update it, they just have it one time, then they leave it, and sometimes it becomes useless, but it's still there. So majority of people do not have the right will working for them. So let's go through some definition. What happens if you have no will? If you do not have a will, what happens? Now, this is what happens here. The legal name for someone who dies without having made a valid will is called intestate, or an intestate person. Dealing with someone's estate when they die, intestate, is dealt with according to certain rules. And these are called the rules of intestacy. Now, we're going to go through some of that in a minute, but what makes up your estate. We all have an estate, each and every one of us. Unless you're under 18, you have an estate. What makes up your estate? So these are some of the things. You've got your property, you've got your cash, your policies. Your policies will be your life insurance policies, your pension policies. You've got your chattels. Those will be things like your gold, your diamond ring, your painting, your speakers, valuable things that you might have. Your business, if you have a business, that is part of your estate. And finally, if you have, it says farm there, but that could also include, farming equipment, or, all those kind of big machinery, basically. That is what makes up your estate. If you have all those things, that makes up your assets, basically. Those are your assets. Your estate is your assets minus your liabilities. So your liabilities will be your debts, your mortgage, your credit card, or credit cards for those who have that. So all your liabilities taken away from your estate, from your assets, is what your estate is, okay? So this is your estate, and it's amazing how there's a lot of people I see where the estate is got a minus in front of it, okay? Again, one of the things we do as a company, we give you a plan that helps you to identify what is your net worth. Do you know your net worth? Very important. Now, this is the rules of intestacy. This is what the government has set up for you, okay? This is what they have for you, planned for you. Let's say there's a husband and wife and children. So there's Mr., Mrs., and 2 children, okay? If the Mr. passes away, now people don't like talking about death, but those are the 2 things we're sure is gonna happen, death and you pay taxes. So let's say the husband passes away. What happens, what the government has laid out is the spouse receives all the personal property and belongings to the person who died away, and then the first £250,000 of the estate. Okay, so all the personal properties and the first £250,000. The remaining half, the remaining of what's left over 250, the spouse gets half of that. And then the children will share the rest between them. So I'm going to repeat that. The first 250 automatically goes to the spouse, and the remaining after 250 is split in half, given to the spouse, and the other half is given to the children equally, okay? So the other half, the children over 18, they share the remaining half. This is what happens, okay? If they're under 18, the money is kept upon trust until they get to 18, then they can receive the money. This is what happens. Now, what constitutes children? Okay, people think, who is your child? So you've got 5 options there. You've got your legitimate children, your illegitimate children, your stepchildren, your adopted children, and your foster children. Out of those 5, the only ones that count as legitimate children that constitute under law as your children are your legitimate ones, the illegitimate ones, and your adopted children. So your stepchildren and your foster children do not count as part of your children. Very important that you understand that. Now, this is the example I was showing to you earlier. This is what happens. So Susan and Michael were married and they adopted their only daughter, Sarah. Sadly, Susan died without leaving a will. Her personal estate is £450,000. So Susan's passed away, she's left 450,000. Michael will get the first 250, and there's 200 grand left over. And Michael will get half of that 100 grand. So Michael will get another 100 grand, making it 350,000 pounds. That is generally what happens. Okay, so using that same example, okay, if Michael and Susan never had any children and they never adopted, and there's no grandchildren, no great-grandchildren either, yeah, on Susan's death, Michael as the legal partner will inherit everything, okay? Everything that belongs to Susan will be inherited by Michael, okay? However, if there's no relative left over, okay, the crown takes all that money, all right? So the crown will take everything. There's a name for that, bona vacantia. I'm not, my Latin is not as good as it used to be, or ever was, basically. But the crown will take over all that money. So that 450,000 pounds will go straight to the government, well, the crown, actually. If you are a surviving relative, like a distant cousin or an auntie, you will have to apply for a grant. And you need to have a good reason to apply for a grant to be able to get some of that money. It doesn't automatically come to you, okay? So that really is what happens when people do not have a will. Now, a will is a written document that lets you decide what happens to your money, your property, and your possessions after death. I always say to people, if you do not plan your life, somebody has a plan for you. You need to plan your life. And a lot of us, we spend a lot of time watching dead-end programs, okay? However, we don't spend time looking at our finances. So important that we think about these things, okay? So you need to plan for life after death. Okay, what are the benefits of having life insurance? You get to decide what happens to your money, not the government, okay? You don't, in some cases, you don't have to pay inheritance tax more than you need to. Because remember, you do pay inheritance tax. It makes things easier, quicker, and less stressful for those left behind. For me, it's really sad when people die unexpectedly and they've not made any plans. I'm sorry, but I talk to a lot of Christians that tell me that Jesus will look after me. I'm a Christian and I know Jesus got my back, but I will die. You will die, whether you like it or not. And you cannot decide when that is. It could happen anytime. So a lot of us is irresponsible when we don't make plans for our families when we're no longer here. Those people that die young, they didn't plan to. Okay? You can set out the wishes regarding your children if they're under 18. When you pass away unexpectedly, the government owns your children. If anybody wants to take the children, they have to apply to the courts to be able to take over your children and be able to look after them. All right? So in your will, you can say, this is what I want to happen to my children. Now, if you're unmarried, this day and age, a lot of people are living together and they're not married. Again, for me, that is a very dodgy place to be. Okay, because when you're unmarried, you do not automatically have legal entitlement to everything. Now, in some cases you could, and if you could put a good case forward, it could actually happen, but it's not automatic. People think it's automatic, but it isn't. Making a will gets you to say, this is what I want to happen to my money. Okay, now, this is an example here I'm going to show you here. And for me, this is really sad, but it happens all the time. So Lola and Femi were married. They have 2 children, Tokwe and Larry. Lola and Femi, they get divorced because these things happen. Now Femi is moved on. He's got a child, Shegun, with his new partner, Jumoke. Femi and Jumoke do not get married. Now Femi passes away. Lola does not automatically inherit because they were divorced, but Jumoke doesn't either because she never married Femi. So all that money is shared equally between Tokwe, Larry, and Shegun because they're Femi's children. Okay, so that's what happens in this example. All right, if you're taking notes, keep taking notes. We can discuss it afterwards if you have any questions. Now, this is a typical scenario for people that have a will. Okay, this is Bill and Vera. They've got 4 children: John, Sharon, Alex, and Kate. When Bill were asked, they suggested the following. This is what people generally do. Bill would say, this is what generally happens in most families. The husband will say, or one of them will say, whoever the husband or the wife, if I pass away, everything goes to my spouse. Okay, that's generally what happens. Everything, the whole estate goes to my wife. Then if the wife passes away, everything is shared equally between the 4 children. Okay, that is what we call the standard will. Okay, the standard will, first person dies, it goes to the partner. Second person dies, the 4 children in this example will share it equally. Okay, now, when you do that, there are some things we call threats to your wealth. When you think about the estate you've left behind, depending on the size, that is your wealth. Now, what kind of things attacks your wealth? Okay, so when the first person passes away, or when the first person is around, there's the long-term care fees, there's marriage after death, there's divorce, bankruptcy, means-tested benefits, and disability benefits. Those are threats to your wealth. When the second person passes away, there's things again, the same thing: divorce, bankruptcy, long-term care. I'll explain all of this to you in a few minutes. Generational income and inheritance tax is another problem. Now, I will explain all these threats to you in a minute, because for me, this is one of the things that really that I was so surprised about when I saw this. All right. So we believe the solution is your assets within the estate can be protected from attack by using a trust. So we've gone through the will. It's really, really important that you have a will, because the will gets you saying to the government or to anybody, this is where I want my money to go to. Okay, so we've established that. Now, how do you protect your estate? Because having a will is great, but remember, this is a game. Money is a game. You need to learn how to play the game. So, what goes into your trusts? What is a trust? It's a legal obligation where one or more trustees are legally responsible for managing the trust assets. Okay, so what can you put into a trust? These are all the things you can put in the trust: your houses, your money, your investments, hold on, your investments, everything. You can put everything into the trust. Now, where was the first trust? The trust has been going since the 11th century. You know, some of you will remember I said it last week, that is it Prince Charles is still benefiting, okay? He's still benefiting from the will of King Henry VIII, okay? So you can put everything into a trust, okay? When can you put assets into a trust? You can put it in at any time. Whether you're alive or dead, you can have a trust. Best time to have it is when you're alive. Okay. I can see that there's a lot of information that is coming out, and I will try and break it down for you. So we've broken down the will. It's important that you have a will. If you want your money to go to the right place, have a will. Get a will done. Now we're looking at protecting your will. And I'll explain to you why you need to protect your will. Okay? This is why you need to go on.
I don't want to break you down. I think what I'm going to ask you to do, there was a scenario which I think is going to relate to everybody. This will and the trust is amazing, but if you could take us back to, I think it was the family that was split up.
Yeah.
Femi, Lanre, that's them there. Yeah.
Mm-hmm.
If you could take us through this, and I'll tell you why, because what we try to do in Saffron is this. We try to relate what we bring here, we try to relate it to our community, right?
Okay.
So I'm going to ask you to hold off on the wills and the trusts, not because they are not important, because they are. But what I think is that if people really want to do that, they can see you or see a financial advisor after. Because we work very closely with our community, there are issues where, like this example with Lola, Femi, Tokbe, and Lanre, this situation, if you could break this down, I think what people would want to know is, you know, how safe would my child be, you know, if I got divorced? What would be in it for me if I got divorced and I moved on? So if we can relate this scenario so that if there is anybody out there that has this situation, they would know what to do. As for the trust and the wills, amazing, but I think it's a bit of overload for them in this short space of time. So what we can do is we can signpost them at a much later time, if that's okay.
I think the reason I probably might not agree with that is because this scenario happens.
Yes.
I've seen it happen plenty of times.
Sure.
How can you protect against it?
Yeah.
I'm thinking you're right, Sam,
So
and I'm thinking you're both right. But if you don't mind me just interjecting in here, is that I've had a lot of WhatsApp questions coming in. As soon as you had this example, Femi, Lola, and Laura Cole, and it was just, I literally had can you please stop him and let's go through this. So it was just like we went through it, and it raised alarms in people's heads, and they're panicking. So can we move back? All what you said after that relates all back to here.
Yes.
But can we break this down and then slowly move into there? If we don't cover everything that you have, but we're able to capture what you've said in the last up to where we stopped you, it'd be great.
Okay. The reason why this happens a lot is, and I'm happy to take questions, is that once Lola and Femi are divorced, Lola has no more rights to Femi's money, and Femi doesn't have any more rights to Lola's money. That's pretty straightforward.
Yes.
If Femi has children, if he marries Jumoke, then Jumoke is his next of kin. And the scenario I showed earlier, where everything passes to the partner, is what would happen in this example, whereby Tokwe and Larry are likely to be cut out if Femi were to marry Jumoke. And so there's a risk of that happening. So if Femi had married Jumoke in this example, and Femi died, everything goes to Jumoke. If Jumoke died, everything, including what Femi owned, goes to Shegun. Because Tokwe and Larry are no longer in the frame.
Okay.
Unless Jumoke is very generous.
Sorry,
okay.
Sorry, Sam.
Go on.
Shegun here is not one of the examples you said adopted kids, and what was the other?
So there was the this one here.
Yeah, stepchildren. So is Shegun not a stepchild in that scenario?
No, he's not, because he's remember, Lola is no longer in the scene because they got divorced.
Yeah.
So Lola is Lola's
gone. Yeah.
So Shegun is Jumoke's son.
From Femi.
From Femi, and they're together right now.
But they didn't get married. So does that mean
Which means
entitled to some of the money?
Yeah, Femi is. So if Femi were to die, all 3 children by Femi would share that money equally.
Right.
But the risk to this is that if Femi had married Jumoke and Femi had died, everything that Femi had worked hard for, even while he was with Lola and they had these two children, Tope and Larry, everything he worked hard for potentially could just be owned by Shegun, and these two would be cut out.
Right. So can you break that down again? So basically you're saying that Femi's first two children, which are Tope and Larry, would not get anything.
Not automatically if he'd married Jumoke.
Right.
Now, because he didn't marry Jumoke, the money will be split 3 ways between the 3 children.
Okay. So I have a question. So
yes,
if that scenario was to happen, and let's say Tope and Larry get pushed out and didn't inherit, would they be able to contest?
not necessarily. They could, but I doubt they're going to win because Femi is married to Jumoke. So in front of the law, Jumoke is the wife.
Okay.
Jumoke is his next of kin. Unless maybe Femi had, and again, the reason I'm going into the trust is because there's a reason Femi can deal with that. So that even when he dies, he can guarantee that Tope and Larry will still benefit from the money he leaves behind.
Okay.
Which is why we're talking about protection. It's about preparing for unlikely or likely things that may happen.
Okay.
So right now, as it is, these 2 children could lose out if they got married. But there's something Femi can do about that.
Okay.
Yeah. Now, he could write a will and say he wants the money to go to his 3 children. He could rewrite his will after marrying Jumoke. But right now, they're not married, so only his children get the money.
Wow.
Okay. Now, the way to deal with that, in Femi's example, the way to deal with that is the next bit I was going to go into. So can I go into that? I want to make sure that people understand that having a will is important, but you need to go through your will every time there's a change of circumstance. Because when things change, it stays as it is.
Sure. Okay.
So we recognize we need a will. Okay. Where you are right now, you need a will to say, this is where I want this to go. If I have 3 children, 4 children, I want them to split the money equally. If this happens, you can put that in your will. This is the person I want to look after my children. Okay. Now, when you've got the will, I know it's complicated again, because like I said, it's something that a lot of us are not aware of and we're not exposed to. But it's really important that we try and understand it. And again, I'm more than happy to, I've put my what's it called in there, my link in there. Get in touch. More than happy to have a chat outside of this. But the way to protect yourself, okay, the way to protect yourself is by having, all these examples here, they're great. This is the normal will, whereby everything goes to the partner and then everything is split between the 4 children. That's the regular will. It's not expensive, okay? But that's the regular will. Now, all these things can attack your will, okay? Because if you leave all this money to your wife or your husband, now, if they were to get married or if they were to go into a home or any of those things, all those things will affect the money that you're leaving behind. How do you protect that and how do you prevent that? You've worked hard for your money. And I'm not going to sing the song because I've sung it before. Watch previous videos. But you work hard for your money. What happens to your money? Okay. You've got a trust. So this is Femi. Okay. He's got his estate in a trust. Okay. All right. The trust is for Vera, which is his wife, and their 4 children. Okay. They need a spouse. So Vera is the first trustee and a professional to be the second trustee. Now, let me explain something to you. Let's say Vera, the wife, remarries. So stay with me. Bill and Vera were married, okay? Bill had his estate in a trust. Bill either remarries or they divorce. Actually, Bill dies, okay? Vera has now remarried, okay? Which means the new husband, if Vera were to pass away without a trust from Bill, would get everything. But now, because Bill had a trust, the new husband does not have access to any of the money that Bill left behind. Okay? Because Bill had a trust. So this new husband does not have access to any of the money from Bill. Now, let me show you what that means here. So Bill and Vera, they have children. Okay? When Bill dies, he leaves an estate of £1 million. A year later, Vera remarries to a new husband, Roy. She rewrites a will and gives everything to Roy on death. Roy has a daughter called Kate. When Vera dies, Roy receives £2 million. In his will, he decides to give everything to his daughter, Kate. Guess what? John, Sharon, and Alex received nothing. So their father, Bill, left £1 million, but because Vera remarried, she gave everything to her new husband, and the new husband passes everything to his daughter. So Bill's children do not benefit a penny from the money that he left behind. That is the classic scenario. Any questions around that? Is that complicated? I've tried to break it down as easily as I possibly could.
No, it's mind-blowing, I think.
Okay, any questions around that before I continue to show you how you can prevent that? Okay, so remember that Kate is Roy's new daughter. Okay, she gets everything, even the £1 million that Bill left behind for his 3 children. So what can you do? The way around that is to put the life insurance trust in a will. So what that basically means is Bill has put his life insurance in a trust. Okay, so what happens is this, yeah? When Bill has all his trust, John and Bill, so this is Bill, yeah? He's got his estate, his £1 million in a trust, okay? Now, once he's done that, he passes away, he gives everything to Vera, okay? Are you all with me? Hello?
Yes,
Am I, is
yes,
it,
we are.
is it?
We're with
Yeah,
you.
Okay, so,
Yeah.
so this is the first child, all right? Let's say he passes his estate to his first child, John. John benefits from some of the money, his son. Now, John gets a divorce from his wife. In normal circumstances, his wife can get half of his estate. But because Bill, the original father, okay, is his estate, the wife cannot get a penny from that estate because Bill has it in a trust. So it remains in Bill's bloodline. Now let's look at the other child, Sharon. Okay, Sharon goes bankrupt. She's got her own business. She's doing her own thing. She runs into money problems. They're chasing her. The courts are chasing her. Now, again, she can benefit from Bill's trust. However, if she goes bankrupt, they cannot come after her share of that. Let's say it's a house. Okay, let's say Bill has given her his house. They cannot come and take that house. They cannot touch that house because why? It's in a trust that Bill, her father, set up. Okay, let's look at the other child, Alex. He becomes disabled. Okay, again, the government will look after him because he does not have any money. All the money belongs to Bill. If he was to go into a care home, same thing, he doesn't have any money. The house he lives in, it belongs to Bill. The car he's driving belongs to Bill. The painting that is worth £100 million belongs to Bill. It doesn't belong to Alex. So the government cannot take it. Kate needs, she doesn't have a lot. She means tested benefits. Same thing, she cannot get access to it. So what the trust does is it keeps your money in your bloodline. Let's say Kate passes away, the wife, okay? How much of that can the children have to, because remember, you will pay inheritance tax if you have a certain amount of money. Now, will she need to pay inheritance tax? No, because it's in a trust. Like I mentioned before, Margaret Thatcher, when she passed away, she had about £8 million as an estate. They didn't pay a penny in trust. So for me, it's a no-brainer having a trust, especially if you have a certain amount of money. Okay, we look at, I mentioned about 100,000 people lose their homes every year because they put them in a care home. So you've worked 30, 40 years of your life, you've bought your property, and when you're old and you need to go into a care home, the local government will take your house, they will sell it and stick you in a home. If you have a trust, that never needs to happen. So this is an example of you having your estate, okay? This is all your estate here, all right? Normally, they will get rid of it and put you in a care home. This is the, if you have over £23,000, you pay for your own care. If you have less than that, the government pays for it. All right. So what you need to do is try and reduce your assets or your estate lower than 14,250 if you want them to pay for it, which is why sometimes they will take your house and sell it and put you in a home. Now, how can you do that? Some people say they can give their assets away, like I'm going to sign it over to my children. But the issue with that is called deliberate deprivation. And what that basically means is you're knowingly giving away your assets so that you don't have to pay for your care home. And the government, they actually go back 7 years to make sure that you've not done that. Because if you have, your trust is cancelled. So this is to prevent people from doing this when they're getting old. So you need to do it as soon as you possibly can. For an example, this is where the husband has died, he's gone home, he passes the home to the wife, okay? They sell it and they put you in a home. They sell the house and they put you in a home, put you in care, okay? What we encourage is, if Mr. Bill here had a trust, half of his house, okay, half of what he's got goes into the trust. What that generally happens then is if Mrs. has to go into a care home, okay, they can't touch it because only half of the house is available to the Mrs. Which means who's going to buy half a house? Nobody. So again, there's a lot of things around this, and I'm sorry that I only have such a short number of time, but what I'm trying to get across is understanding that everything can go into a trust. You've got your pensions. Your pensions can go into a trust because everything is attacked. So if you have a pension, you pass away, you pass it to your partner, that can now be attacked by the marriage, divorce, all those kind of things. However, if you put your pensions in a trust, if your wife needs access to it, she just takes from it, from the trust. She can apply for loans to your trust and benefit from it. And if she passes away, guess what happens? She repays the loan from her estate and the children can benefit from that. And that happens literally to everything, including your life insurance. You can do the same thing, okay, whereby you put that in a trust as well. And it's really, really important just to recognize, I know there's a lot to cover in this. And I'm sorry about timing, but I'm going to stop there because this could get messy. Is there any questions? Only 6% of people actually use the trust. Honestly, guys, if you think about all these lords and sirs, all these people that keep their money in their family, okay, it's not by accident. It's all been designed. They all have a trust, which is why they can continue having generational wealth. We don't have generational wealth. Our children, most of the time, have to start at zero. Okay, we need to start taking advantage of these things and using them. I'm not going to go through this. This is just talking about inheritance tax. If all your estate is more than £325,000, remember your estate is your house, your car, your life insurance, everything you've got, you will pay 40% of anything above that in inheritance tax, and your children have to find the money first before they can tap into your estate. So they need to find that inheritance tax first. All right. So setting up a trust is pretty straightforward. And the benefit is that you can actually have this and your money will go to the people you want it to go to. Okay. Again, I'm really sorry about time. I've got to go somewhere. I've got people waiting for me as we speak.
That's fine.
But any questions? Any questions?
Please feel free to unmute yourselves if you do have any questions. I mean, I know there is a lot of information out there, but please feel free if you have any questions you wish to ask Sam before he goes.
I'm going to put my details in the chat box again. Please complete my questionnaire. It's a 2-minute questionnaire, just to give me an idea of, what could be better, what could have, and what you will benefit from this. Awesome. But happy to answer questions.
Okay. Maybe just one, Sam.
Yes.
I'd like to ask, for those people who don't own properties, council tenants or housing association, but possibly have, large amounts of savings, because there are people like that. How does this apply to them? Well, I mean, because they won't be able to put the council flat in trust.
No, because that's not theirs, unless they've bought it. I think if you've got money, what they need to think about is having a will.
Yes.
Because you want that money to go to the right person. You don't want your money to go to somebody that you don't want it to go to. Now, I've spoken to people who they separated from their partners for 2, 3, 4 years.
Yeah.
But they've not actually officially done it properly. That person is still legally your next of kin. And you've not been together for a while. If you died, they get everything. But we don't spend time on these things because there's so many more important things to do. But you'll be shocked.
Okay.
Which is why it's important to take these things seriously.
Okay. Okay. So in a nutshell, can you summarize in 1 minute or less than a minute, summarize everything in layman's terms for us?
Layman's terms.
Yes.
Get a will. At least look into getting a will and plan your estate properly so that you get things into the right places.
Okay.
Your children, their children, their children, children's children. If you can leave your estate in your bloodline, imagine what that would be like.
Awesome.
Everything can take your assets from your children that you've worked hard for. I think it's important to think about that.
Brilliant. Okay, Sam, as usual, you've blown our minds up.
I'm so sorry. I'm going to have to leave.
No, please don't.
I wish I could have stayed.
It's fine. It's been an amazing 4 weeks, and I know you've done, you've opened up so many minds. So So thank you so much for coming on and for being with us for the whole of financial February. You know, it's been wonderful. I think Primrose has a question she would like to ask. Do you want to unmute yourself, please, Primrose?
Yeah, thank you, Samuel. That is what a great presentation, as always.
Thank you.
Yeah, can I just ask, would you, are you able to share this presentation? We can pick it from Saffron.
Unfortunately, I don't share my presentations. It's more, it is my intellectual property, but I'm more than happy to have a chat again. If you send me a message, let's have a chat outside of this room, if that's okay.
Yes, that's fine, absolutely. The next thing, because the topics, everything you touched in there, sorry I came late, but everything you said in here is, there's so much to emphasize on than in 30 minutes, but or an hour. But listen, trusts and wills, that's a topic for a whole day. People need to hear so much from this.
Yeah.
But otherwise, thank you.
You're welcome. Thank you.
Okay.
All right, it's been a pleasure. It's been a wonderful 4 weeks. Thank you so much for the opportunity. I really appreciate you.
No.
Complete the questionnaire. Let's hook up outside of this.
We will definitely do that. Thank you so much, Sam.
All right, take care.
Much
God bless.
your family.
Sam,
See you all. Bye.
Bye.
Okay. Wow. So that was Sam, everybody, financial coach. And you heard what he said. And in a nutshell, get your will and prepare your estate. You know, I know it was quite intense, but it's finances. And there's never a time we will talk about our finances that is going to be a comfortable discussion. But I hope that, you know, we've all been able to draw something from what Sam has said. And, you know, like, please feel free, you know, outside here, if you, you know, if there are things that maybe when you sleep tonight and wake up tomorrow, you think, oh, I should have asked that. You know, we do have a feedback form. So we will be dropping the link in the chat, and you can also always fill that out, and we can help you with any inquiry. So without much ado, we have our lovely guest, Primrose, who is back this week. Welcome, Primrose. It's lovely to see you, and thank you so much for honoring our invitation amidst your very busy schedule. And it's really nice to have you again. And this is, as we, you know, we're talking about family finances, and Primrose is our personal and business insurance specialist. So without much ado, I'm going to hand over the floor to you. And whilst this is going on, guys, please feel free, once you are given the opportunity, if there are any questions, you can either ask out on the Zoom or you can type it in the chat. And our Facebook family, feel free to type on Facebook. And I know Yemi, myself, or Marcia will be able to pick up the questions. Okay, Primrose, over to you.
Thank you so much, Giz. Good evening, everybody. I'm so sorry I was late due to like unavoidable circumstances, but I'm glad I'm here at last. Wow, I must say it's been a wonderful 4 weeks of learning so much around finances and getting our, you know, monies together and knowing the exact things to do. And thank you to this organization for letting us have the opportunity to learn so much. I just feel like whatever Samuel has, you know, like discusses, I mean, it's so much detailed. I wanted to ask Giz, you know, like for me, I would just give a summary. I mean, how can I even retaliate from what he's just said, you know, like he has been saying? Why don't we Giz brainstorm on what we've learned from the 4 weeks? And I can't hear you. Are you gone off?
Sorry, I was about to do something. I said, please go ahead. You're the financial guru.
You understand, because when we talk about the topics we've been handling,
yeah,
4 weeks,
yeah,
they are so deep, they are so detailed.
Definitely.
And when we say we discuss them in 30, 40 minutes, 1 hour, it's not enough. But when we can use this time now to then ask ourselves whatever we want to know. If anybody has a question to ask, then we can all interact together, and you know, it helps to understand more. When you talk about like wills, like as Sam has said, I'll give you an example. I had a friend of mine passed away last year in July. Now, she had a 16-year-old. This boy had just turned, in fact, the boy turned 16 after the mother had died, 2 days after the mother died. Now, to my experience, this is somebody I helped to do their life insurance. Now, when I help my clients, I normally follow them up. If they have a problem, I'll be there. If I know them, I'll even be there more, like even to the very end, because when I do a service for them, I always ask them to share my contacts with your family. Let somebody know, yes, let your next of kin know that you've done your life insurance, because there is a point in time when it's going to help you, when it will sort, when you will need it, but you can't talk. When you have a critical illness, you can say nothing and nobody knows you've done this. So this lady, after burial, 2 days later, social services came in. I was still at the venue because the brother, apparently, I knew the family. So the brother asked me to stay and, stay around for the meeting with social services. So then these are things we always read, but when it comes to, to the real thing, when, now social work comes in and they have to take on from, to follow what do they call it? To do what they have to do.
Assessment.
So we had this meeting. So we had this meeting. The lady starts talking, the social worker starts telling us, oh, this is the procedure actually. The boy was, I won't say the name of the boy for protection purposes, but then they told us that they were taking the boy because he's just turned 16, still underage. So the brother was confused because the brother knew. The brother, first of all, had the will. And luckily he had it, at hand. So he was prepared. So they said, but the brother said, no, you cannot take the boy because according to my sister, I've always looked after this boy. But listen, the moral of the story is, if this boy did not have this document, the social services, you would have, taken the boy away into foster care. But only that's safe, because they were like, waste anything legal you have, any legal documents. And that is when she asked me, because it was like, what do they exactly mean? I said, do you have a will with you? Because we had talked before, we had talked about it. This is the person who had done her, and it gave her a lot of time to prepare. So I asked him, did you come with a will? Do you have everything? He said, yes. So he pulled out the file and the will was there. So that's the only savior that saved the boy from being taken away from family. So when we talk about these things, it's important. We always feel lazy doing it. We always do our life insurances and that's it. But there's so much meaning to these things when we do it. Make sure somebody knows you've done this. And on a rainy day, we don't know when. Today we're okay, tomorrow something, we don't plan with God, but you never know what happens. We just need to plan, like we say, plan, be prepared. Anything happens, you're ready, right? So things like that, we can brainstorm.
I agree with you.
Let's interact.
I agree with you, Primrose, because and that was you see, when he had that scenario, Giz, where we went back to the Femi and Lola and all of that, we have a lot of family breakdowns in our communities, and when it was a bit of a pullback for me as well. So like the Bill and the other family that he also picked out, where the man had £1 million, which he would have wanted to leave for his family. He had 2 children, he had left it to them, but it went to the wife, isn't it? But then the wife remarried, or she went to another relationship. Did she marry, Marcia, or was she another relationship? She remarried. Now, because she had married, that money had then become hers, and when she dies, it goes to her children in that marriage, but not the original children that the money was meant for. Do you know what? I think that just blew me, that you work so hard, you think you've left something for your family, for your children, and it just goes over a whole generation of everything into a whole new family. And then if they're wise and if they can lock that down, they'll lock it down into some trust. And the original
Sure.
inheritors would never inherit the money. So people, I don't know, but that's I can't get past it.
And I think another thing, something that comes to my mind now with this COVID pandemic and lots of relationships that are suffering, as a result, in a couple of months, maybe a couple of years time, we are going to have lots of these scenarios where people are separating, moving in, possibly not marrying, but living together. And then, the sharing of the properties or whatever, or somebody dies as a result, and this scenario, presents with us. And I think it's something that we kind of overlooked, because I'm sure a lot of people thought, well, because it's my common law husband or my common law wife, it's not going to be a problem. But based on what Sam said, some of those children are going to miss out on inheritance that has been worked for them all their lives. So it's a very scary scenario. And I know it was quite a lot of information, but I think we all need to go and educate ourselves and get financial advice, because obviously it's only information that we're able to give you on the platform.
Yeah.
So
I
on
think
an
if there was
individual, go and get.
sorry, babes. I think if there was something that
Go ahead.
everyone should take away from here, it's just that scenario. It's frightening.
Yeah.
And I
Yes.
know that the last thing, we do the oh God forbid, God forbid, God forbid thing. Okay. But like he said, it's true. But like he did say,
Happened.
it is going to happen. So why not
It will
prepare
happen.
for
Yeah.
it, and then also
Sure.
then plan towards living longer,
Prevention.
but still prepare for that, because it's not about you anymore. It's about the family,
Leave behind.
Who you're
and
leaving
that
behind.
exactly. So
Yeah.
it doesn't mean because you actually do a will you're going to die. I think it just means that you're
No.
not selfish, and you're thinking about your immediate family, because all that you've worked for, you're thinking,
Yes.
I'm going out, I'm working for my family, I'm working for my family. You're probably working for somebody else's family, because
Yeah.
they might not get it.
Yeah.
Yeah. Can I say something? Are you done,
Please,
Remy?
Go ahead. Go
free,
ahead.
go
You
for it.
know, that just reminded me. What we have to, what I remind people that, fine, put it simply, that you done your life insurance. Say, for example, after doing it, what's the next step? Put your policy into trust, like Sam said, to avoid all of this. So then there's a place for beneficiaries, trustees, who is supposed to benefit from this money. Now, we've had certain questions or instances where even trustees go before the owners of, the or settlers, before the owners of the policy. Do you understand? Fine, which is okay. Change of circumstance, we call it. At dead. Some people, I've had to remind my clients, sometimes every now and then I check on, heard from you, is everything going okay? Just to touch base with them and, like reassure them, everything's going all right, my side and all that. So then somebody mentions to you, oh, actually, I had an illness that incapacitated me for about 4 months. Oh, did you make your claim? Because you're covered for income protection. Did you make a claim?
Hmm.
No, actually. Oh, I forgot. I didn't know. So the reason why we go back to ask, to check on clients, check on people, find out what have you done. I always emphasize this to community, to the wider communities, that it is important to know what you've done, to know what you have. You have your life insurance. How does it benefit? You need to understand. People have taken out insurances, but they don't even know what it means. Do you understand? So it's very, very important. And when circumstances change, you know, your marriage has changed, you moving on, you know, update so that, you know, we avoid such things happening. Understand? Yeah. So we just need to plan and keep ourselves, you know, like up to date with everything. We're living in a fast world, so we have to move fast.
Yes,
So,
I think
Primrose, let me ask you what sorry, I wanted just to find out if people already have existing life insurance.
Yeah.
That's already running or has been running for a few years, and they now wanted to put that life insurance policy into a trust. Is it possible, or do they need to do another new one?
So what we do, it's possible, but what we do then, we do ask you to do a review, because you want them to understand what you done 10 years ago, 5 years ago. You did to, it helps you when you have a review with a consultant, with an advisor, then that means they're going to help you understand now, because you're now more alert. And then, you know, take it that you having a consultant to tell you about, take you through these things. It's just like going to the court with a lawyer. You know, they'll put you into the right direction. They'll make sure you've done ABC. Know your term, you should have done this instead of doing that. Listen, you did a life insurance, but these are the conditions on your policy. For example, I'll give you an example. Most people have done life insurance, but there are conditions. I remember in the very first session of this discussion, the first week of the month, when we were discussing the streams of income, Sam brought it up to say the different types of insurance, life insurances, the conditions. Have you taken your life insurance only on accidental death? I've found this as a mistake with most people. People have made mistakes on their policies. Fine, the idea for you to do life insurance is okay, and we don't blame anyone, you know. But when you go to say the banks online for people to help, so much information overload. You wouldn't keep everything. Have your policy reviewed, then get to know what to do next. But yes, if you've done your insurance years ago, it's fine. You can still put it into trust. There's no limited period of time. But if you've done it many years, understand, you know, it's always nice to have a review. Then you understand whether what you've done, you're on track. You know, you're not just wasting your money, because if you have chosen a condition like accidental death to be paid on accidental death, that means then that the provider will only pay you if death was by accident, which is wrong. Yeah, we've seen people who just sleep, who just, you know, like die from illnesses, you know, who don't wake up from their sleep. Death should be death regardless of how you go. So small mistakes always are the ones that should. And then you find people saying insurances don't pay. No, they pay, but how did you do it?
Okay.
It's the option.
And then there's a very important one, because back in the days before there was so much regulation, when I used to do credit cards, pre-existing conditions used to come up quite a lot. So can you talk to us about that, especially with what you see COVID, what COVID did? COVID brought up the fact that people had underlying illnesses that they didn't know about.
Exactly.
So if you can talk to us about the pre-existing conditions and how it will affect somebody doing life insurance and trust, and, you know.
Okay. I'll say, obviously, if somebody has pre-underlying health conditions, I'll give you the common popular ones: diabetes, high blood pressure, cholesterol, if things like that, you have something like that. Obviously, your policy, your premium is going to be different from somebody who doesn't have nothing. And what happens then, that means your policy on application, your policy is going to go into what they call underwriting. Now, this is when the insurer now goes to your doctor to pick up with your consent, pick up your medical report to see the extent, or what extent, to what extent is the risk of the problem. Then they assess it. Then they'll say, if A has no underlying health condition, they are the same age, everything is the same, but A does not have any underlying health conditions, therefore her insurance is £5. B will have an underlying health condition, but because of the medical report from the doctors, this shows that her case is a high risk, and therefore her insurance is going to increase by a few pounds. We will cover them, but it will increase by a few pounds. Then we also got people who have suffered critical illnesses in the past. So you see the dynamics in the premiums there. So while people who have got nothing are going to get away with it, and it will be just a good premium, people who have underlying health condition, the premiums would be different. So, and then we have also another category of people who have suffered critical illnesses, things like critical meaning, things like cancers, stroke, heart attacks, or whatever. It's so difficult for somebody like that to get a critical illness. But again, critical illness cover or a life cover. But what happens? There are providers. There is a provider we know. There are different providers. So we would know where to place you, to advise you and say, there are providers that say, okay, your policy, your application won't go into underwriting. We will cover you directly, but we will not cover the underlying health condition. Do you understand? You've suffered a heart attack before. That is a critical illness. Meaning if that went into underwriting, they would either not even cover you, or they would not give you the policy. So what normally they do, these other providers who say, okay, we will cover anything that will not result out of the heart attack, or not result out of the stroke, or HIV. Okay, you have HIV underlying, fine. It doesn't mean you're going to die from HIV. People with HIV are now living a better lifestyle. There's medication, there's everything. They live longer. So while this is ongoing, anything could crop up, anything like a stroke. So we will cover you for anything that might crop up other than what you have existing. So there's something for everybody. And yes, everything can still go into a trust.
Awesome. Yes. Thank you for that. I have a question from Facebook. There are two. Can a single person have a trust? And secondly, if one is in debt, will that be passed on to the family after death?
Yes.
I responded to that one on Facebook.
Okay.
Yes.
Okay. Okay.
Do you want to elaborate on that for us, Marcia, please?
So if you leave your debt behind, and for example, if you haven't got a trust, remember what Sam was saying, if everything's in a trust, no one can touch it. But if you haven't got a trust, it's open, your family was liable to pay for that debt. If you're married to that person before and you're the wife, whatever is left, you are liable to pay out for that. But whereas if it's in a trust, it can't be touched.
Okay. So if the person owes money, they can't take it from the trust?
No, the trust can't be touched. That's what you're saying.
Okay.
That is why, as he was saying, people who are wealthy remain wealthy.
Yes. Yes.
A trust is a legal. To add into that, a trust is a legal. Yeah, a trust is a legal document. It's a legal binding document. So it's powerful, people. It's powerful. We can't even play with it.
Right.
Okay. Sorry, one more thing before the case comes in. ISAs. How legal and how binding are ISAs?
I can't answer that. That's banking. I can't give advice on that.
Yeah, I was just going to say that same. I'm not into that line of banking. Yeah. So ISAs is banks mainly. I wouldn't give any advice on that. I'll be misleading. Apart from knowing I have
then mean we'd need to seek legal advice around that. Is that what you're saying?
Yes, I think maybe you need to go into the bank and ask those questions directly with the bankers.
Yeah.
Okay. Now you did say the debt can be passed on in death to the family, but what if the parties are divorced? That doesn't obtain, does it?
No, because like he said before in his presentation, if you are divorced and there wasn't a will.
So who does that debt go to? Because there'll be children, won't there?
Whosoever gets the money, whosoever benefits from your from the money. Yes.
Brilliant. Okay. So I guess it makes sense to clean up the debts before yeah.
Put them in a trust. And you know,
Put them in a
as
trust.
we were saying earlier, first of all, we don't like thinking of wills because we just think if you make a will, you're gonna die. Okay, that's just a myth. And also, we also don't feel that trust are not for us because we think we don't have anything.
Yes.
As he was saying, you do have, but we feel we don't have anything. And many times we say things like, we leave the house to the children, but we don't understand what that means. It means putting it in a trust.
I'll carry on from there, Marcia. I'll give you an example of like certain times people come to you and say, oh, I want life insurance worth 200,000. You do not, first thing you ask, why do you need this money for? There are different reasons why you should take those, like huge lump sums. Why do you need it for? Have you got a mortgage? Yes. How, what's its worth? There are things to consider as to how much. Then the reason why people so many times fail to afford, paying for their life insurances sometimes is they give themselves huge monies that they can't afford to pay for. There's something for everybody. I always emphasize this. There's something for everybody. Much as you came with an idea of getting 300,000, what's it for? You do not have any liabilities, okay, apart from having 3,000 or 2,000 worth of a credit card. So why do you need this money? You don't even have a mortgage. So take something that can be able, like Marcia said, mentioned something like, we think we are poor. We think we do not deserve to do this. We do deserve to do everything. You imagine, we've seen families who have suffered losses of loved ones and then have to make all ends meet to get finances to do funerals. Imagine such families when, in devastation of like even getting 100 pounds or 500, putting 500 pounds together. When you don't have it, it's something. So when you come to me and say, okay, I want this, but then I can't afford to pay it, because if you want 300,000 worth of insurance cover, and it's going to cost you as well, it's going to cost you more than 50 pounds. Can you afford to pay this comfortably every month? No, because you're going to take it to please yourself. Then 3 months down the road, you're going to cancel it. So be honest with yourself and take what you can afford to pay for. Because when you look at it, what's the reasons we are doing these insurances? To protect ourselves in times of, financial crisis. So take something you can afford that you know that at the end of life, I've managed to keep myself out of debt. Good. I do not have a mortgage. Okay. I think 50 grand can be enough for me. That way, I'll use 20,000 for my funeral and everything. I want to be repatriated. That's fine. And then the 30 grand will be for, just a gift for my family. Do you understand? So it's always, the mindset.
On the flip side to that,
yeah,
if you're taking out a life insurance, sometimes you can be underinsured. So you might take out the life insurance for 100,000, but yet your mortgage is 200,000. So if you goes, that 100,000 doesn't cover your mortgage, doesn't cover the debt that you leave behind, doesn't cover the school fees that you were hoping that you can pay. You understand? So there's that flip side to it as well.
Thank you, Marcia. I'll say something towards that. This is now the reason why we say to people, do reviews. You talk to someone and they say, I have my life insurance. Are you on mortgage? Yes, I am on mortgage. I'm fine. I took it from the bank. Everything's fine. My friend, banks are not insurance advisors, and they have a disclaimer on their paperwork. Seek advice. Always seek advice from insurance advisors, because you find out that somebody, I've found them, I've seen them, they have insurances, life insurances, like just what Marcia just said. You have something worth 100,000, but then your mortgage is 200,000. If anything happened before the term ended, your family, the banks are gonna repossess your property. Do you understand? So avoid that. Always, let's review. We have to review policies. For if you've done it, way back, it's okay. Review what you have, so to make sure you have adequate cover. That's only what I wanted to emphasize, really. Back to you, Giz.
Thank you so much. And you guys have shared some amazing insight into what we should be looking at. And you rightly said there that when we talk about writing a will, especially within our community, there's this element of paranoia, because it's related with, I'm writing a will, oops, it means I'm going to die soon. That's not the case. So people, if you're out there, you're listening, please think about it. We're not just talking about for ourselves, we're talking about our children. There was something Sam said, and he said, the rich people within this country, they don't necessarily just leave for their children, but their children's children's children. The lineage, it's
generations.
The monarchy are not even, some of them are eating money that was left.
It's true, by great grandparents.
Yeah, you understand. And this is what we need to do. It's I know it's a lot, and it's a bit in your face, but it has to be in your face for you to do something about it.
Yeah,
so
we just have to talk about things. We just have, it's uncomfortable to talk about it, but we got to plan. So many times I've even had people who tell me, I can't believe we are discussing my death or my funeral. I said, yes, we have got to discuss your funeral, and I want you to be comfortable because I need to help you plan your funeral. I need to help you plan your end of life. So then your kids will be happy. We have to live responsibly. You are working so hard, and the reason could be that is your why. Why are you working so hard? Why do you get up in the morning every day to go and work? Is to make their lives easier, is to make them happy. So yes, we got to get out of your comfort and discuss these things, because we cannot say, oh, I didn't know anymore. We cannot say that anymore.
Thank you for that,
Primrose. And it's as you were saying, Primrose, it's important that your family knows. I remember when my grandmother died, we didn't have a clue what she had. And then when we turned the house upside down, there was money and bank books in every grandchild's name that we didn't know about. So it's very important that their family knows, because we buried her and everything, and then later on we found that there was money there, and then when my husband's parents died, that was a different story, because the way they had things laid out, he knew what to do, and his name was next to everything, so he was able to just do everything quite smoothly. So the difference it makes when when you have that conversation with your family and you leave things in place, so they don't have to be scrabbling around trying to figure out what next.
Exactly, Marcia. This takes me back to the trust. When you done your life insurance, end of story, you haven't written your trust. They don't know where this money is going to go, because it's in your trust where where you state who your beneficiaries are. So you haven't done all this. Who is this money going to go to? Is it you left it to next of kin? Or what? Do you understand that process? Let's just do things that are right, the right way.
Okay, I have another question.
Go on.
This is on Facebook. And should elderly people look to buying property shared with children instead of cash buying, as they are getting older and at risk of illness and care? So, when Sam was talking about what will happen towards the end, your home will be taken to pay for your home, your care, your residential care due to your illness. So this person is asking, should elderly people look to buying property shared with their children instead of cash buying, because they're getting older and at risk of illness and care? What would you?
I think that's a wonderful, I would second that, because if the older, obviously we and they're suffering illnesses, at risk of illnesses, I mean, doing it together jointly is better than letting them, letting her do it by herself, because that then means if anything happened in between, could be a critical illness, could be death, then you don't remaining person can always continue with the property.
Yeah.
You know, yeah, it's
Okay.
the
And
best
it's the
thing to
same
do.
with the business as well.
Yes.
You
I want
can
to say
like
that.
put in your relatives or your children's name on that business,
Yes.
especially if, you know, if you don't have a will as
Yeah.
well. Yeah.
Yeah. I was just going to say, what can you tell any young person? And when I say young, so at what age do you advise we start talking to our children, educating them about what we have, you know, sitting them down to tell them, I've got this life insurance, I've got this is what happens, because I doubt they're learning this in the schools. So at what stage, and what advice do you have out there for the young ones?
Yeah,
Sorry,
that's a good
Primrose, let me
question.
contribute
Yeah,
to you,
Giz, actually.
Primrose. Primrose, sorry, before you, I just
Yeah, no
want to add
problem.
some to twist the knife a little bit before you talk. Um, you know, within our culture, we okay, let's break it down. At the African culture, and I know that Marcia, you probably would say the same thing, is is our male figures don't like to discuss what they have. And then it makes it worse even when they do not have male children. So when you're the female or you have so many female and no male child in the family, they definitely do not discuss inheritances or what they have with you, because one, they feel that, oh, you it's going to go on to your whoever the female the girls get married to. Now,
Where you going?
yes,
Mm.
yes, and these are things that we fail to discuss within our cultural settings, and many times these families do not know what the fathers have, their what do you call it? What do you call it? Their
Thanks.
what they have. Yes, their what they have, their
Investment, investment.
investments,
Mm.
their houses that other people know that the families do not know,
They don't know.
and they wouldn't come
That's
and tell you
true.
anything. So we are going probably back on the narrative of the girl child, but it's something that we really need to also address within our communities, that why is it that
Yeah.
you do not you they're happy to reveal to the male child but not to the female child, but also some don't even
Hmm.
reveal anything at all because they feel that you're going to get rid of them before their time.
That's true, right? Yeah, yeah. I mean, to start with that, I would say the narrative has to change, has and has twisted a bit, if you like, because you're gonna find families where there are no boys.
Mhm.
Are you gonna then leave your inheritance to your brothers or to
Mhm.
your nephews, or where are you gonna leave your money? You still need to sit down with your kids and like discuss your property. What have you done? How are things gonna be done? Everything has got to change. We're living in a very fast move. The world is moving at a very fast pace. The things we used to live men do, now we have to do. We have, I'll give you something, I'll tell you a story here. At my workplace, because we do work on a commission basis. So we had a newbie a few months ago who joined the company. And then when she was asked a question as to why did you join? What else are you going to bring to the company? Why did you join the organization? She said that, you know what, actually, you know why I joined? I want to make money. How do you want to make your money? She said, I want to make so much money than my husband. And the question was like, it all raised, like concern, why? Why is it? Because he's always thought less of me. He has always thought I can't do like, I'll never beat him. And I want to prove to him now that I can do it. So you see, that is, change of your mindset, that we are, much as I'm a woman, I still can think like you think. Do you understand? So this girl has that, and that is her goal, is to make more money than her husband. And yes, she can't do it. Depends on the effort she puts in, and how she's going to strategize to do that. So things have changed a little bit. So we have got to sit down with the kids as family, regardless of whether they are boys, regardless of the sex. Girls need to know the same things that boys do. You understand? Girls need to know the same things that the boys need to know.
Mm-hmm.
What age, again, when about kids asking me about the age, I often tell people from the age of 14, 15, kids, this is the age when kids are very sharp. Even from 12, they are very, very sharp. They'll be asking you questions you do not even expect them to ask you. So it is when you prepare their minds to then now understand that if I have, say, for like I have £10 to spend on shopping, what do I need to buy? The essentials. What are we going to buy? Groceries. What do we need? We need beverage, we need sugar, we need that, we need that, we need that. But okay, we cannot have this because that's not essential. We don't need that. So that way, this person grows up knowing that I've got to be responsible for finances, for the money that we have in the house. Prepare them. There's so many ways of preparing kids for monies, to understand money, for them to have a piggy bank. You're preparing them to know that you got to have a lifestyle of saving.
Yes.
From as a smaller age. And when they save, don't let them use the money to buy I've seen to buy things like off Amazon, things like Roblox stuff, those cards which are, meaningless. Make sure you ask them. I sit with my kids and ask them, so what's your goal for this, for this year? What do you want to buy from your piggy bank? Say, Mommy, you know what? I've always wanted this. So how much is it? It's going to cost us like 300. Get your piggy ready, whichever money, gifts at birthdays in terms of money, put it into your box. And do you know how much smile they have when it's now that rainy day, they have to open the piggy and there's lots of money. I'll help them contribute. I say, I'll give you £1 every week. At the end of the week, I'll give you £1 to add to your box. Don't worry. But it gives them that you're preparing their mindset to know that I save for something, I save for something that is a need. I don't save to like waste money, buy this, buy that. I cannot break this piggy anytime I want. No, until when I think this is the time I've given myself a time frame, I'll break my piggy for it to be able to pay this for me.
Sure.
So, and when we talk, the other thing about finances, let your child know. Say, for example, I deal with families who have parents who have kids over 18 years of age, 16 years of age. I always tell them again and again and again, let your kids know, because now they're adults. Those are the people close to you that if anything happens to you, they're the first points of contact.
Mm-hmm.
How good have you prepared them? Don't let people look for your paperwork. Take ages looking for your paperwork. No, prepare these persons to know that, okay, Mommy did this. That in the event of a critical illness, she can't talk, she got a stroke. She has her private medical cover. Oh, actually, we can do this to help her. So that way you're preparing the kids to be responsible. The earlier, the better. Talk.
Yeah. Talk. Okay, and obviously we know the country will soon open up. We're opening up small, little by little.
Small.
People are gonna start getting out there, they're gonna, obviously we're gonna want to spend a bit of money because we haven't been. But then on the other side, money hasn't been coming in. So what advice can you give to families, knowing this is the last week of our financial February? We want to throw something positive out there for them to be able to manage the rest of 2021, because it's still going to have its challenges. So what advice can you give, or what information rather can you put out there for us to be able to use to be able to manage our finances going forward?
Okay, I would simply say this is how I look at it, that if we manage financially since months, and we manage to like, for me, the lockdowns have worked for me, because I think I know for sure I've saved. The unnecessary monies I would have like wasted, I've been able to like, you know, save that money, not to use it. So it's gonna open. Everybody can't wait to be out.
Yeah.
But again, does it mean we now gonna be, you know, like spending recklessly? No. I don't, I don't say we cannot have fun. We still have, still have to have fun, but spend responsibly. Still have a budget when you go out. Are you saying something, Giz? Sorry, I thought you were saying something. Yeah, still have something, you know, still have your budget and work by your budget. Do not be, you know, overwhelm your finances. Do not overwhelm your bank account. Still live within your means. It's not the end of the world that, oh, we are now out, we got to like blow it away. No, this lockdown was a process to prepare us to like, you know, have a system of like monitoring us, our finances, and getting to know, okay, I can be able to actually live on £100 for a month, or I can be able, depending on how large your family is, you know, in terms of food stuff. Yes, we can live on £100 because we got, you know, we can do this and that out of this. So it's again going back to the drawing board and knowing that, you know what, we got to live within our means. You're not going to blow money.
That's really, really good. And you know, Financial February, we started from the beginning, and Sam talks about a lot of things. Remember, we built the house. So what I would ask is, you know, you can watch back all the programs we've done for Financial February on our YouTube channels. Just type in SaffronSACAP on YouTube. Type in SaffronSACAP on YouTube and it will come out. And you will then hear everything that Sam and Primrose have talked about during the whole of Financial February. And there's something that stuck very clear in my mind, and I have it all over my bedroom, was the CCMP. Does anybody remember? And then Marcia, you're not allowed to answer because I'm sure you do, but yes, the CCMP, I'm hoping. Marcia, are you able to just quickly, I don't know if you are able to just quickly help us with the acronym of CCMP?
Hold on.
Okay.
Give me a moment. I'm doing something.
Oh, okay, that's fine. Okay. Primrose, I don't know if that was the week you were off, but Sam did talk to us about having a clear, concise, meaningful plan. And I think, you know, I did speak to quite a few people off of Zoom, and many people are actually thinking, and he did say it's not a very nice thing to sit down to do, to analyze our finances. So I would like to just some few last words. How should we sit down and look at our finances? So check your income, check your expenditure, check the debt you have. And for people who are burying their heads in the sand, what would you say to them? Where should they start? You know, because a lot of Sam did mention a lot of suicides are related to financial hardship. A lot of marital and relationship breakdowns are related to financial hardship. So please give us some few nuggets.
Okay. To be honest, yeah, like you said, it's not the end of the world that your finances have been, you know, messy when you find out. You find people living on credit cards, which is a very, very, very hard thing. You know, that's the most thing that messes up finances as well. So, you know, if you find yourself in a mess, always, there's so much support. If you cannot seek support, there's, you know, get back on paper, get your pen and paper and track your spending. Say the things, find out the habits you've been, you know, involved in that have been wasting, taking a lot of your money, and identify whether you really need these things or not. When you identify you need this or not, it will help you like track your spending, cut down on your spending, and then stay with the things that you think are essential. What are your needs? Do you need a cup of coffee? I gave you an example the other day that, you know, me spending 17 pounds a week because I'm buying coffee every day I walk into workplace, because the coffee shop is at the entrance of my workplace. I can't, you know, coffee is my like, you know, my crave. So I'll buy this coffee every morning, but I've learned now, I'm learning to like cut down on that. So 17 pounds at the end of the month is about 70 pounds. Right now, when I look at 70 pounds, and it's not until late when, you know, with this program that I analyzed and said, okay, I'm spending 70 pounds a month. Where could this money go? Then I get back to my spending, you know, like to my statement and look at my spendings and say, okay, instead of paying 70 pounds with that, I could add on 30 pounds and be able to pay my, for example, council tax. Do you understand? So things like that, we just got to, it's not easy, but we got to do it painfully anyway. We just got to do it. It's going to be painful, but we got to get, if we want to see ourselves somewhere, we got to do the most painful things to make sure we get our finances back on track. Doesn't matter what period of time it takes, but if you cut out one devil of coffee, you're saving 70 pounds. If you cut out eating out every day, you're spending whole lots of money. Eating out every day might cost you more than 10 pounds. It will cost you more than 10 pounds. So plus Uber, that's about 12. So eating out every day, you can, you know, save that money, put it towards something else. So that way, I mean, it's not the end of the world, but we can still fix it.
Okay, sorry, I wrote that. CCMP, clear, concise mental picture. Oh, so it's knowing what you've got. So what's your income? What are your debts? What do you owe? What do you own? You know, what are your goals as well? So you, as I think if you, for example, you can have income of say £2,000 a month, but your credit card is 3,000. It's knowing that. So you're working for nothing every month. If you want to pay off your credit, if you want to take your whole salary one month and plunk it into your credit card, you still be short. It's knowing what you've got coming in, what you've got going out, what your goals are, and making sure that what you've got can cover. So if you've got a very high credit card bill, start paying one off at a time. Start paying them off. There's no point getting yourself into debt all the time. You're spending on the credit card, but the income you've got coming in every month just goes with the credit card. Same with the overdraft. Sometimes the salary comes in and the overdraft takes everything. So it's knowing, have a clear, concise mental picture of your financial self. That includes income, expenditure, your debt, and also your goals in life. Because, you know, for example, you might have a goal that you want to have a holiday of a lifetime in 5 years' time. You need to put that into this plan, this mental picture. This has to be in there as well, because you're working towards that. So whatever money you've got coming in, you've got to be putting some money into that plan as well.
Thank you, Marcia. That's amazing. Yeah. That's amazing. And guys, it's the last 5 minutes of financial it's been an amazing month. Thank you so much to obviously Sam, who's left us now, but thank you so much to Sam. You know, you're so chilled when you're talking about this finance. I just sit down and think, when I look at my finances, my wig just stands on end. So like that. Thank you. And we've got amazing feedback. People have been, you know, like, wow. Amazing session. And thank you for helping us, because the idea is we want to impact on us that oomph. So Marcia, as usual, thank you. We want to thank all our guests for coming on. I'm seeing some very new names. Mr. Fashola, Edward Fashola has joined us. Thank you for joining us, even though we haven't seen your face all through, but I got a glimpse of you. Thank you for coming on. Uchenna Emeronier, thank you. And to all our Facebook family, thank you. But we're not closing as of yet. Before we close, we have shared our feedback form please, 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 we do ask that you give us feedback, because we can't grow unless we know how we're doing. So let us know how we're doing. Let us know what more you want to hear from Saffron and how we can impact on your lives within our community. This is the last session. This is it now for financial February. So guys, you need to just go away, take all the nuggets from the 4 weeks, and let's do this. There is nothing that can stop you from owning your own home. There is nothing that can stop you from having all your debts paid off. It's about planning. And that's what has rung in my ears this whole month. Plan. And if you can't plan alone, there are people you can talk. Cam is here, Primrose is here. We will be the bridge. We will signpost you to them. But please, 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 guys, let's try and get ourselves financially astute. Yeah. Before we go 6 feet under, and we will go 6 feet under. So it's nothing to be scared of. Prepare yourselves. Get a will. Get the trust. Okay. We're moving into March. So we're going to welcome you. Yes, I know we've got a few more days to go of February, but I'm excited. Please join us every Wednesday still. March, we're going to do the whole March, and it's going to be based on disability, which is another very, very, very something that's very, very close to our hearts, as an organization. So please, please, please tell one, tell all. First week in March, we will start. And for our Nigerian family, I know some of you are on Facebook. We are very excited. I'm buzzing. The Voice Over talk show is landing in Nigeria tomorrow.
Yay.
So the Voice Over Nigeria will be landing tomorrow, Nigeria time 7 p.m. to 9 p.m., which is UK time 6 p.m. to 8 p.m. So yes, we are going to be live. It will not be once a week like we do here in the UK, but we are kicking off live tomorrow. Join us so that you can find out when next you can hear from us in Nigeria. But it's going to be good. It's going to be very exciting. I'm blown away. And to be honest, guys, we couldn't have done this without all of you, because we came, you spoke, and you said to us, this is what you want. We went away, we listened, and we've come back to hopefully impact on your community as well. So Saffron SDGF, Saffron Social Development Global Foundation, is bringing the Voice Over to Lagos. So, yeah, and you can actually tune in from anywhere in the world as well. So we will be sharing the link, as we have on all our social media handles. So please tell one and tell all. All right. It has been an amazing February, and thank you to everybody that made this possible. You guys are awesome. You're amazing, and you make us love what we do. So I'm going to hand over to my boss now to see if she wants to say anything before we go. Over to you, Yemi.
It's amazing how you say my boss. We all know who the guy at the top is. Okay. I just want to say a really, really wonderful evening. I'm still on the edge of my seat from what the wheels is, and those scenarios that I know I can't get over it, and those scenarios that Sam painted. What I'm going to do, and I do hope you do the same, is go back onto our YouTube channel. All the recordings are on there, and I think it will be something to go back to week 1 and just take your time and review it and pick out things that will be very beneficial to yourselves and to your extended friends and family, because a lot of the information is very full on, and you catch things that hit you in the face, but you can't really address it right then. So these are the reasons why we have these recordings and why we put these recordings out there. You can also access it on Facebook, because we're always streaming live on Facebook as well, hopefully, as we move along, we'll be on Instagram and probably get our own app soon. Okay.
Yeah.
Yes, so thank you very much for joining us, and look forward to seeing you in Nigeria tomorrow. It'd be nice for you to join us, support us. We need all the support we can get. And have a lovely evening. See you in March at the next voiceover in the UK. Primrose, thank you so
Thank
much,
you,
sis. Appreciate.
Yes.
Right.
Thank you.
Have a good night, everybody. Stay
Have a good night,
safe.
everyone.
Bye. Good
Bye.
night.
Bye.
Bye.